reality that we've introduced a reasoning engine that is more capable at reasoning, or as capable as reasoning as humans are capable of reasoning. And that has never existed in AI prior, right? We've always had to hard code some amount of rules around your predictive statistical algorithmic systems. You now have these reasoning engines that have incredible capabilities of creation that we've never seen before.
Hello, everyone, and welcome to another episode of MUFG in Conversation, our series where we explore timely topics with key industry leaders shaping the innovation ecosystem. I'm Priya Rajan, Managing Director responsible for national VC coverage at MUFG Tech Banking Group. Today, I'm thrilled to be joined by George Matthew, Managing Director at Insight Partners. It's a global software VC firm. George, thank you so much for joining us.
Oh, thank you, Priya. I really appreciate this opportunity to have this conversation with you and the team.
It's been overdue. So let's start with your personal journey, how you went from neurobiology at my alma mater to leading AI investments. You started, what was your pivotal moments that shaped that transition for you?
It's funny you mentioned this because it is my, 30th anniversary from graduating from undergrad at Cornell. And so it does go back a little bit in terms of, that pivot, for lack of a better expression, of going into the software tech space. It was between my junior and senior year, believe it or not, Priya, I was actually studying for my MCATs that summer. And I was working at Cornell Information Technologies because it turned out that was like the highest paying job for, the summer jobs you could do while studying for the MCATs. And as I was working at Cornell Information Technologies, it so happened that I was always just a tinkerer at heart, despite being pre-med in those days. And I was actually working on not only just help desk support, but also just some of the emerging technologies and systems that were kind of around distributed systems at that point, which was mostly around Unix. And we had a very strong relationship with a bunch of the other supercomputing facilities, and one of them was, of course, NCSA, which is out of University of Illinois Urbana-Champaign. And that summer, Mark Andreessen shipped the NCSA Mosaic browser, and we were one of the first alpha testers of the Mosaic browser. That summer of '93 or '94, and I saw the browser. And as I was studying for my MCATs, I saw the browser while I was on duty on the help desk. Literally closed my books for studying the MCATs that day, called my mom that evening, said I'm not going to be a doctor, and followed the journey from there to go figure out, where the entire shift that was happening at that moment around the internet was going to play out. So that's how I got into tech.
Wow, I'm afraid to ask, what was the reaction of your mom?
Oh, my mom cried. No, my mom definitely cried when she heard the news that evening. Being a good Desi mom, she definitely was in tears. But I think after a few years, after going through the journey that I went through personally, I think she was pretty okay with how it turned out. But in that instant moment of making a decision like that, particularly, as the oldest son, is coming out of college and is supposed to go to med school. That was pretty intense for a Desi mom, at least. So
I'm sure she's extremely happy now. So that's incredible. How did the scaling Alteryx to IPO, as an example, influence your approach to investing and mentoring founders today?
Yeah, so I did do a few things in between, going out of college and, of course, scaling Alteryx. And I think, one thing I will say as we go into the conversation on scaling Alteryx, the experiences there were all very instructive, leading to becoming president of Alteryx. And I'd say the three most formative experiences was, of course, my first startup that was building e-commerce systems in the mid-90s, a company called 4 Point Partners, which we had scaled out to really building the generational e-commerce systems at that moment. And then, of course, being employee 200 something at Salesforce.com for a few years, and then of course joining SAP in the moment that SAP was transforming itself, and being part of the team that acquired Business Objects and really going into what the last generation of data systems were before, of course, finding the next generation of self-service data analytics, which I had a lot of passion about going into Alteryx. So by the time I had joined Alteryx in 2011, there was really a shift that was happening in the market at that moment, Priya, because the last generation of data analytics systems, the Business Objects, the Cognoses and the Hyperions, were really, really good at scaling enterprise reporting needs in the BI space. But a lot of the business users and business analysts that needed to do analytical data prep blending modeling, as we now know it today. We didn't even have those words to properly describe what was going on at that moment, as well as the sort of dashboarding and visualizations, which of course, in those moments, Tableau was doing incredibly well at. We didn't have self-service tools really to enable users to build systems at scale in the hands of those data analysts and business analysts. And that was the big unlock in a lot of ways for both Alteryx and Tableau back in the mid 2010s, because both companies were able to see that the last generation of prodigious enterprise BI systems didn't meet the needs of the business users, and the business users had to scale in terms of what they were building beyond Excel, because Excel kind of pretty much died at 1 million rows of data in those days. And you weren't at heart a programmer in using the SAS programming language to go build an analytical model. And so there was this entire space right in between that was unoccupied. And really that's where two multi-billion dollar businesses emerged. Of course, Tableau got acquired by Salesforce, and of course, Alteryx went all the way to the public markets and $1 billion in ARR before Clearlake and Insight actually took it private a few years back. The reason I just mentioned that entire background is that the big unique insight was really to be able to build the analytical systems that were necessary for business users to really democratize the way that their work was being accomplished. And if anything, if we look at the AI wave, and we can talk about the things that are happening in the AI wave today, it is a furtherance of that democratization that's played out for well over a decade plus at this point.
Wow. Yeah, and that's a perfect transition into kind of like what we're now talking about, like technology wave that's shaping the next wave of enterprise innovation. AI is it. You've spoken about agentic AI, the systems that reason and act autonomously. What does that mean to the enterprise software, and how are we seeing real world kind of deployments? I think that has been a lot of conversations around it.
So I think there's a lot of nuances at this moment, particularly as we're well into 5 years around the infrastructure that's required to build AI systems. And now we're starting to see this wave of agentic technology come to scale and building what are agentic systems for both vertical as well as domain-specific use cases. I think that the exciting part and the thing that is wildly different than any generation of software prior to it is the reality that we've introduced a reasoning engine that is more capable at reasoning, or as capable as reasoning as humans are capable of reasoning. And that has never existed in AI prior, right? We've always had to hard code some amount of rules around your predictive statistical algorithmic systems. You now have these reasoning engines that have incredible capabilities of creation that we've never seen before. First and foremost, that manifested in the LLMs and the scale at which, of course, OpenAI and Anthropic are at this moment. And now the ability to build agentic capabilities around the LLMs. I think what's really exciting is that the reasoning engines that are emerging can now perform that reasoning at the level that most enterprises function today. And likely we'll get to superhuman reasoning as those models continue to evolve in the next half a decade or so. What's really challenging is, as well as they are built for reasoning, they're not that great at doing a number of things that are deterministic in nature. And that's where a lot of enterprises are struggling today, because the assumption is, well, we've got the ChatGPT interface for the enterprise. We should be able to introduce a number of deterministic capabilities to that same model, and it should perform incredibly well. I think what's going to happen, and I think we're already seeing it right now, is that the best agents over time are highly grounded in enterprise data. They are being able to be pointed back to deterministic models that have been already built, or the deterministic needs of making a calculation accurately, doing an aggregation that makes sense, being able to have an answer that comes from your enterprise systems that is authoritative and trusted, and the models don't need to hallucinate the answer, right? Because if the models don't have high quality data to come back with an answer, it will try to please you and come up with an answer that looks reasonable, looks right, but ultimately is wrong. And so my view now is, like, we have all the technology that we need to build these compound AI systems where the LLMs and agents are best for purpose around the probabilistic reasoning that humans, and potentially over time superhumans, will be able to do in the enterprise. And then you still have to connect back to the predictive statistical algorithmic machine learning models and older models that have existed in the enterprise alongside of the substrate of super high quality data. And if you bring those things together in the enterprise, I think we have a transformative movement for all of enterprise software, and probably much more than enterprise software.
Yeah, and you just touched upon this as well. Like, the domain-specific agents will definitely outperform the general purpose Copilot. I'm like super user of Copilot, but that's just the basic use case.
Well, there's a good nuance to this, by the way, too, because what's really interesting, you said that, right? Up to this moment, and particularly in the last sort of 3-4 years, those domain-specific models are very good at getting to the deterministic outcomes that we're talking about. But in this sort of general purpose reasoning perspective, what's been really incredible to see is these general purpose reasoning oriented models, and both gathering both intelligence in the past and now the combination of intelligence and reasoning, and how the current foundation models are working, they've actually remarkably outperformed a lot of the last generation of domain-specific models. And part of that is because there hasn't been as strong reasoning capabilities into the last generation of models. So that's why there's been such rapid evolution. And every time a new model emerges in the frontier, they outperform the domain-specific models in the past. I think that will start to attenuate at some point sooner than later, in the sense that we've now reached a moment where the things that are now built on top of GPT-4 and GPT-5 and Claude and the additional foundation models that are in market today likely aren't going to see a massive improvement in what you built as a domain-specific, either fine-tuned model or retrieval augmented generation, or using the context windows surrounding, being able to build the things that you would need in the next iteration of the generalized model. We'll see how that plays out, because ultimately, the foundation models are continuing to race towards building, not just an 11th grade level reasoning, but of course getting to college level reasoning and potentially PhD level reasoning, and then beyond that to the superhuman level reasoning. So I think we'll see. I mean, there's obviously a lot being put into the enterprise today, as well as just more broadly into the consumer space in terms of how the models evolve. But I've got a simple thesis on this now, Priya. Like, most of the enterprise that we all know as not only software, but just how industries work today, predominantly work at an 11th grade level of reasoning. And we've already reached the moment that we've gotten to 11th grade level reasoning the models. So things should start to settle down. It's
about time we would start graduating. And it's graduating at a very fast pace. You've emphasized about reinforcement learning as we are talking about from human feedback, and that's extremely critical in aligning the AI use cases with actual user needs. I think talking about the previous point of like, which are the ones that's actually going to convert to kind of true ROI and show the actual deployment that's like bringing value to the company. If you can share, how does that work and why is it so powerful to pair that up with the great UI kind of design, UX design?
I'll talk about a little bit about where enterprises can go with this from this moment on. But before I even do that, it's probably worthwhile to talk about ChatGPT itself and when ChatGPT arrived. ChatGPT was originally based on GPT 3.5, right, as the model that it went to market with. The most interesting and compelling difference between GPT 3.5 and 4.0 was what? It was actually the use of reinforcement learning. Because it was the first time that you could, at least at scale, be able to represent all those feedback loops in terms of what the model results were coming back with and drive an improvement in the model by using the human feedback loop, the reinforcement learning that was basically coming out of the output of 3.5 that drove the quality of where 4.0 was as a model. And I mentioned that because if you look at where we are today, the ability to have this, at the very least reinforcement learning, most likely over time, even shifting towards a fully continuous learning experience. And that continuous learning experience likely will be backed with some sort of enterprise memory. And that could be represented well by the data infrastructure providers, or it could be a higher level performance-oriented memory layer that sits very, very close to the continuous learning models. But I think that is where the next evolution, particularly for the enterprise, will play out. Because it is still a little awkward if you have a well-trained model that might be fine-tuned, for instance, or you're using some level of retrieval augmented generation, that you still have to go and improve the model over time by either doing that fine-tuning exercise again, or sort of this continuous improvement by taking this feedback loop and introducing it into this current generation model. But why isn't that as models evolve, you're just continuously learning, right? And so I think there's going to be a little bit more of a shift in terms of the overall model architecture to support that. But I think as I look at, the way that we've seen sort of AI systems, particularly in the last 2 to 3 years, build out, we've got everything that we need to reformat most of enterprise software, if not more than enterprise software at this point.
It's fascinating. I mean, such great insights on the AI and alignment. Let's pivot into kind of the venture landscape and the IPO landscape. Your Insight partners have deployed over, I believe, $5 billion into AI. And how do you approach capital allocation today in today's climate, especially with there's a big gap between haves and have-nots? Would love to hear your perspective.
Yeah, we are, as you know, a multi-stage investor that has been aligned towards founders that are focused on growth for well over 30 years, and of course now on our 13th fund, and we are always looking for the growth opportunity wherever it might exist in the market. I think it's an interesting moment right now because it's super clear that you can find a lot of growth earlier in the cycle, and that's because there's a fair amount of infrastructure that's being built. There's a number of amazing vertical and domain-specific AI systems that are effectively being built on top of that infrastructure. And so we get very excited by that early stage value proposition. And I think that for sure continues to be a place that Insight will continue to invest as a multi-stage investor across venture capital and growth equity. I think as you get into some of the later stages of investment, things get a little harder. And I think I'll kind of draw out where some of the challenges emerge. On the pure growth opportunities, and particularly when you think about companies that have achieved some degree of post-product market fit, particularly around the AI world, data AI ML world, the challenge is that everyone is seeing those deals and everyone is chasing the same opportunities. And oftentimes the ability to make a incredible investment just is diminished because the price expectation, the valuations come to a threshold where it's just hard to make a very compelling growth investment right now. So I think growth has become very hard right now, particularly if you don't catch that growth early on in the cycle of making the sort of product market fit or potentially even the free product market fit investment. I think the area that's still very exciting in a lot of ways is also where Insight continues to do a lot of incredible work, which is in the opportunity to buy and build. And if we think about the buy and build opportunities, find a very compelling growth asset, continue to invest into multiple assets that are complementary to that growth and build a bigger total addressable market and build a total offering that really, in most cases in verticals, does well to serve an entire set of personas in that space. Those opportunities are still quite good for anyone who's interested in doing the work of the buy and build. And I think if you look at some of the more recent exits that we've even made, those exits have looked much stronger, particularly as we've taken the time to build out that thesis, find the multiple growth opportunities, and be able to scale it out in a way where those exits have been to the industry leaders in that space. So that's an ongoing opportunity. I don't think that's going to change anytime soon. And then of course there's the scaled out players, particularly in the AI space right now. Foundation model builders are continuing to grow tremendously. Databricks as a beneficiary of a lot of the infrastructure that's required to build this next generation of systems is also growing quite well. And so we continue to find opportunities in that later stage as well.
You've had some recent wins, especially on the strategic acquisitions and exits. We talked about Alteryx take private, and we had talked about CoreWeave's kind of acquisition of Weights and Biases. How are you evaluating kind of M&A opportunities now, and what is that like consolidation? What role does that play in consolidation of like kind of the next generation of companies?
I think there's multiple layers that consolidation is occurring, and I can talk a little bit about existing markets as well as emerging spaces that consolidation has occurred more recently. I think in the existing markets, if you think about examples like where a rev tech, GTM tech market has really gotten a number of key players getting to 200-300 million run rate, and noticing that the only way to potentially grow from that moment on is to merge together. I mean, we start to see that with, Clary SalesOps is a great example as consolidation that occurred in that space. So that there will be sort of existing markets that are consolidating in that manner. The AI market, of course, is very, particularly around infrastructure, it's a white hot moment. There's no way to say otherwise. And there will be moments where the market there will also find opportunities to find the consolidation point. And in this case, the recent acquisition of Weights and Biases by CoreWeave was really unplanned, right? If you think about where Weights and Biases was, over 1 million machine learning practitioners that were standardized on using it. All the major foundation model builders, including OpenAI, Anthropic, Cohere, Meta, NVIDIA, were, as a standard, using Weights and Biases for the experiment tracking, parameter cheating, version controls that were necessary to build those foundation models. I think Google was the only company, as far as foundation model builders, that wasn't using Weights and Biases at that level because they've had a lot of their own internal tooling. When the moment came for CoreWeave to, come into market as a public concern, there was a desire to go deeper into software. But guess what? As one of the largest purveyors of a fleet of GPUs, and of course the NeoCloud that CoreWeave became, you needed a world-class GPU profiler to be able to understand what all those GPUs were doing. And Weights and Biases was, of course, the perfect product in that regard because it became the world's greatest GPU profiler. And so that was a consolidation of strategic concern of being able to take the profiler that's sitting above the GPUs and all the providers of GPU compute, and particularly CoreWeave being one of the largest providers, finding that reason to see the synergy. And it was a pretty great outcome for everyone involved, even post acquisition. The Weights and Biases team is thriving inside of CoreWeave. So I think there are moments where both the past of the example of RevTech, GTM Tech will consolidate for the reason that this market is becoming more competitive and there's a lot of players in the example that I mentioned earlier, as well as there's like these new strategic opportunities that just open up because the new market as it's being defined could be more vertically oriented, like the example of where CoreWeave came in and bought Weights and Biases. And both will matter, I would say, for the next half a decade. So we're likely going to see more M&A activity, more acquisition activity, particularly for this next 5 years in both the existing markets and the new ones that are emerging.
Yeah, and I had the unique opportunity to connect with the Weights and Biases team when we were in Japan earlier this year.
Oh, great.
They were crushing it. And we're talking about M&A, and another side is the IPO. We're starting to see more activity there. With the Navan was the last one that went out. What signals tell you that the company is IPO ready in this environment?
I'm not the expert on when IPOs happen, so I will try not to pretend that I'll be able to time anything as far as the opening of IPO windows. My general sensibility is that it takes a bigger, more scaled out company than ever before to IPO in this market. I don't know if that's necessarily the best thing in the world, and I have some opinions on that, mainly because I remember when we wrote the S1 to take Alteryx public back in 2017. We were still sub 100 million. I think we were closer to about 80 million in run rate when we took Alteryx public. But a lot of public investors benefited from a company like that, and other companies that were able to come into public markets, well-run, scaling out, consistently producing results. I think the markets today in the public space are expecting larger companies to go out and more scale in the companies that are coming out. And so the number is very different, right? It does feel like it's well over 400, if not even larger, in terms of run rate of businesses that are, even considered IPO worthy at this point. So there's a good long train of companies waiting to go public. There is sure a backlog. It's a pretty massive one. My guess is that as we've started to see, some IPOs, Hinge Health went out, as you know, others have more recently gone out, and Navan, as you mentioned, went out. So we're going to see more going into 2026. So it should be a pretty exciting window for both IPOs as well as M&A to occur. And the exciting thing is all of it's happening for strategic reasons, that the markets are robust. Their tech is not going anywhere. If anything, it's continuing to expand into more and more opportunity beyond even just what the enterprise software value proposition is. And in fact, if you look at most AI companies today, they are moving past the software value proposition into the services portion of those markets and the labor function of the markets that have been historically sort of, mostly just focused on people. But now we're seeing the blending of AI systems cover both the software and the labor function. So I think there's a lot more opportunity ahead of us, particularly as this growth is in my view, a secular growth trend that has a fair amount of durability to it. So I'm excited for what's going to play out in the next half a decade here.
Before we wrap, a couple of quick questions, just as you touched upon looking ahead in 2026. We talked about the IPO window, just layers of AI stack, just coming back to AI. Where do you see what's going to be most critical for just looking at 2026, and which are the ones you're going to see we're already saturated?
Oh, I think the area that we can't seem to get enough of right now is high quality data. And the reason I just mentioned high quality data, it's less and less about how much petabytes of data storage you can actually now provide and the value of that petabyte data storage. It's more about being able to deliver the context that's relevant to be able to power the AI systems that we talk quite a bit about in this podcast. And so if you're building that context layer, that is incredibly valuable real estate to be able to drive a lot of enterprise growth and adoption as a provider of the underlying data substrate and that context layer. But it's also the thing that powers and aligns all of the new models, mostly kind of transformer and post-transformer based models that have now become the standard for how reasoning systems are basically built. So I think that is an area that I'm continuously more bullish on. And it does appear that particularly the large foundation model builders are taking a book out of traditional enterprises, particularly when it comes to a forward engineering standpoint, and starting to build a lot of enterprise-oriented solutions on top of what they provide as capable models. So we're going to see, in my view, a fair amount of forward engineering-oriented solutions being built by the foundation model builders as well. So both of those things are, I think, going to benefit the B2B customer, the CIOs, the CDOs, the CTOs that are looking for high quality products and solutions being built on top of data AI ML. So I'm generally, forward and bullish about everything that's going to happen in the next few years here.
One piece of advice before we let you go in terms of mindset shifts that the founders need to take in this AI-driven market.
Capital matters. I don't think there's any question that scale and capital matters. I also think that it is a clear moment that most of the SaaS playbooks that we've historically known for at least the last decade and a half aren't going to be perfectly suited for how this build of AI systems at scale emerge. Part of that is because the biggest ability for a founder to build a compelling business at this moment is that they're very intimately aware of where the foundation models are today, what could be disruptive that the foundation models could do, and stay one, if not 3 steps ahead of where the foundation models are. And there is a deep amount of lock-in that you're building with workflow embedded capabilities that you just won't get out of the box from what a evolution of the foundation model would provide. So going deeper into the workflow, going deeper into how you integrate with the rest of the things that sit alongside of you in the enterprise, being very sharply aware of what's happening now and in the future of what's being built in the foundation models. I mean, that's where the most interesting companies, particularly in the early stage of the journey, are appearing. And we have founders now in the Insight portfolio, which have basically taken 2025 and gone from less than $1 million in ARR to 12, 13, 15 million. I have a company right now, which we won't name because they're about to raise their Series A, that went from 0 to 20 million in 3 months. And so, and again, that's not just in the Insight portfolio. That exists in a lot of venture, and particularly in the sort of AI space, where the companies that have been built post 2022 have that mindset of like how to build on top of this reasoning engine that has emerged for humanity. And so that's where I think there's a lot to be excited by. And the growth trajectories of the companies we're talking about, we've never even seen them during the SaaS era. I mean, look at like some of the numbers that are emerging on the agentic coding side, right? Companies have basically gone from 0 to 200 million in the span of a year. So I think there's more of those coming by every single subsector in software.
That's incredible. Great advice. Thank you so much for your insights. And it's super clear that the next few years, if not decade, is going to be extremely transformative, not just in AI, but also the venture investing space. And you guys are right in the middle of it. So really appreciate it, George.
Absolutely, Priya. Thank you for the time and the opportunity to have this conversation with you.
Awesome. Thank you all for joining MUFG in Conversation, and see you guys next time. Thank you.